Okay. All right, everyone, can you see the chart and can you hear me? All right. AB is okay. Let's see. Hold on. Good afternoon, loud and clear. Good. All right, so hold on one sec here. All right, hold on for a second. Hold on. Okay, one sec. I'm just going to get started in a second. I got to figure out something here with the storage space for the recording. Hold on.
So I'll come on.
Right.
Keep your IM open so I can talk to you.
Okay.
Screen,
All
I'll
right.
take it from you.
Okay.
Just keep recording. Don't shut down.
Yeah, got it.
Okay.
All right. Okay, so sorry about that. We got that working now. Yes, thank you, Mike. So let's get started. I wanted to. Mike left his wallet in here, so I wanted to talk about the anatomy of an entry, for one thing, and also talk, well, as things are swinging around like nuts right now, as you can see, the euro yen in the last, 10 minutes, 40 pips lower. So I wanted to talk about the anatomy of an entry. So last night, in the report last night, we had, hold on, I don't know. I'm not sure. Okay, Dale B can't get into the room, but everyone else appears to be in here. So last night we looked at, euro yen. Euro yen is something obviously I've wanted to get on the long side for a couple of days. Obviously been a drastic decline. We've been, we were short, and then I did that video over the weekend. We were short, got out about 1,000 pips too early, I guess. But in any case, due for a very sharp rebound, right? And after we got the J spike here the other day, we actually had a couple of them on yen crosses. That was the, kind of the trigger, if you will, that it's cool to start looking on the long side again. And we'll look at some long-term charts here in a second. With euro yen, we have, this is when you're trying to trade a turn. My point is, when you're trying to trade a turn, you've got to change things up a lot, because obviously it's not going to go the way that you plan all the time. So, the lines that we had here, again, the bold line is daily reversal support. That's 133.10. Okay, I want to keep these levels in mind because, obviously we have FOMC come up here in a second, and Market could move all over the place. And other than that, we have basically 133.30 to 133.55 is kind of an estimated support for euro yen, and resistance up near, again, 136, maybe 134.65. So the reward to risk was seen on the upside with stops against 132.85, and that's really still the case. But when it comes to trading, obviously you want to protect what you get. That's first and foremost. And, we moved stop to break even basically 133.20 and at 33.26 after the entry this morning. So obviously this structure as it is here is no longer, okay? It didn't pan out. If I were to show you the current chart, let's just bring up a chart with nothing on it of euro yen real quickly. So we'll get rid of everything here. And the chart we were looking at of euro yen last night looked something like this. Okay. Obviously this didn't hold. You had the median line here. Oh, hold on. Okay, there we go. This is the real screen. Sorry. The screen is not frozen anymore. So we should be good. Obviously we had a, this version, this structure here, okay, and it didn't hold, right? Overnight, spiked through it here, and the market's unable to hold. So, my feelings on the, can you guys see the screen? The screen right here? You still can't see the charts? Okay. All right. No. Okay. You have it now. All right. Bingo. Good. All right. So real quick, I want to go back. I was talking about this last night. This was a chart from last night, right? This is the way it was presented. When you're trying to trade a turn, obviously things are going to change a lot intraday, especially when you're when volatile markets, and you can get these fairly large swings on an intraday basis. So bottom line, we were seeing support basically 33.10 to 33.50 area. Picked out 33.40 for an overnight swing entry. And when I come in the morning and I see how the market's trading, I'll obviously in my own trading, I'll refine it, and because I want to get the best possible entry that I can. I'm a true believer in that a good entry is really good risk management, right? Crappy entries, larger stops, all that stuff. So by focusing on precise entries, you can limit your risk substantially. And this structure, as it is right here, obviously is not any longer. It's no longer valid. Okay, we've dropped through this thing, whatever. So we get rid of it. Okay. So with an understanding of the longer term picture, right? We've got one, this is a monthly chart, okay? Two, we've got the weekly chart bouncing from, level under almost 130, very psychological level, trying to put in a weekly reversal. And also with seasonality, this is euro yen seasonality, which actually turned positive this week. Okay, and if you don't remember, this is last week of January last year, we turned higher as well. So we've entered a seasonally bullish period, gives us reason to kind of look on the upside after such a drastic decline. So what we look at now, and this is kind of how I got in the entry that I got into this morning, you ask yourself, where's the slope on this chart? Okay. Obviously, you have a steep advance here, but the market behavior since here is markedly different. It's not nearly the same as it was. Let's go to a 30-minute chart. It's not nearly the same as it was here as it was back here. Okay. So this is a nice slope. It's a lot of touch points. It's very short term. It's really only the last few days of trading. What I'm going to do is I'm going to put that there. Okay. Now you'll notice that the entry when we got long this morning it was actually, I'll bring over my real account, real chart here. So I was buying some yesterday over here and then got in here. This is a 5-minute chart. When I tweeted the 33.55 resistance, I scaled out of some there. Again, the swing I think is on the upside, at least reward to risk basis, but you want to, scale out when you book some profits is the way, you got to make a living, right? So, book some when you get up into resistance and bring the rest to break even. And if you catch a flyer, awesome. Okay. Obviously, the results and whatnot that are posted in the official trades for the list are strictly based on the entries and exits that are provided. So this doesn't count. But just for my own trading, to give you a sense of what I do and how I do it, right? Everyone's different. Everyone's going to trade their own way, or should. So when we look at the current slope, the support was actually a little lower, right? It was actually at 33.10, which is daily reversal support, okay? But I said, you know what? There seems to be a good shorter term slope support here, and this is a 5-minute chart. And you say, what the heck is this guy looking at 5-minute charts? It's swing trades, right? Well, again, it's all about the entry, okay? So we did have estimated support here, and not only from there, but also from another shift fork. So you can see here, right? And then this one was really good. And then when you look at the 5-minute chart, look at all these wicks down here, okay? This was telling you, this is, really what I call the anatomy of an entry. One, where's your price level, right? We had already decided last night that 133.10 to roughly 133.50 is a support zone, and if this thing's going to go immediately higher, that's the zone that we kind of want to buy in to, right? Then looking at the short term, is there any structure that indicates support at that level that we got to? And the answer was yes, right? And then third, the action around here, you started to get a bunch of wicks showing you that this sharp selling, right? We've gone from, in a matter of, 20 minutes or so, we had gone from, 133.75 to 133.20, showing you that there is support here, okay? So that's why the entry, why I tweeted out at that time to go long, or that I was going long or whatever. And at this point, we do have, a long position with, I'm leaving my stop at 33.20. Look, FOMC, I realize is coming out. It may very well get hit, that stop. If it does, so be it. But I'm not willing to risk, any more than that on FOMC. I want to be positioned for the move. And if we get, a rip higher, then that'll be awesome. But I'm going to minimize my risk. And that's really all you can do, is minimize the risk in trading. If you get on the right side, you can catch it, and that's awesome. And again, even if we get a move to the downside in Euro Yen on FOMC or whatever, I'd still be looking for support because, again, the longer term chart, right? We talked about, and I'll show you some other, I'll show you some other stuff here. The longer term charts, we've got one, the support I showed you. Two, let's look at Euro Yen with some of the indicators, right? Euro Yen, the big, magenta bars, right? Those are the J spikes on a visual. I put those obviously in the scans or whatever each day. We got one here. We got one here. They don't obviously always work all that well, but sometimes they do indicate an extremely important bottom. Last year, this is actually quite interesting. Remember last year, that was January 27th, that J spike. This year we got one on the 26th, okay? Obviously this decline is much more significant than the decline that we had last year. Not even close. This is a much greater degree, right? The volatility, synthetic volatility that I like to look at, okay? 1160, so let's find out points when the volatility was this high. Again, this acts just like a VIX, so when it's really high, it's going to indicate a bottom, like, you know, fear, right? So you can see here, here's the only time we've been higher with the VIX on euro yen, where the blue bars are there, right? The only time we've been higher has been at points back during legitimate crisis. This was the May 2010, the European, credit crisis, right? Ended up getting some very nice rips off these levels. I mean, this, you went from 110 to 120. This right here is 110 to 120, right? So look, I think the big trend's down, but of course I'm going to try to position and catch a move that I think can get us to 136. That's 300 points away, 250 points away. Other than that, obviously the whole financial crisis, okay, even within there, when you start getting these initial readings, you had rallies, from 134 up to 140. So euro yen, a great instrument to trade at the moment. And if this works out and we're able to catch the upside on this, then yeah, I'd be looking to potentially return to a short position up at 136. Okay, remember we've got the the resistance line that works so well. I say the slope that works so well as resistance right before the ECB, came out and sent the euro dollar from 116 to 111 and sent euro yen from 137.30 to almost 130. Okay, so we'll be looking for return to the short side at 136. So regardless of what happens today, let's say if there is a negative reaction to FOMC, okay, and euro yen gets smoked on the downside, what you'd be looking for at that point could be, since there's so much on here, I'm just going to put up a new chart because that way you can see it clearly, because who likes a bunch of crap on their charts? I have a lot of crap on my charts, like lines and stuff. When I publish them for you guys, I try to get rid of them, just so it's a little clearer. But let's say that here's another reason to have our stop where we have it. Actually, I haven't even noticed this yet, but here's another reason to have our stop where we have it, is we've got this level right here, the median line, okay? If that gets taken out, then your next support actually is down here, okay? Down at the 132 region. So if we were to get that and say this is something like an A, B, C, you would expect a drop under 132.50. Support would come in, let's see here. You could be looking for support at 132, to be honest. We'd have to let that play out. But, this, I'm kind of comfortable with a stop under this level, okay? Even with the understanding that FOMC obviously can send it spiking one way or the other, and you might not survive the stop and all that, but would be quite silly, wouldn't it, to not have a stop heading into FOMC, or forever for that matter. So with all that said, we've got euro yen looking for the snapback into 136. Whether it comes from here or not, I don't know. If it does, awesome, and we'll be on it. If it doesn't, then we'll try to get long again, maybe closer to 132, okay, or wherever this line comes into play. If you have a full on collapse and this thing doesn't hold at all, then you might actually get, this would be volume support at 131.50. So we'll see. Okay. Obviously, let's get deep into the Kiwi, right? So Kiwi Dollar. Might this be the next big breakout on the downside? It could be. A few things. First of all, yes, there is some support here, okay? Oh man, it's not visible. Pooja says the cursor is not visible. I changed computers this time because I wanted to make sure that it was visible. Man, I don't know I don't know. Oh, Stefan says it's visible. A lot of people say they can see it. Okay. Well, all right. So I'm not sure. Let's move on to the Kiwi though real fast. So the Kiwi Dollar, we do have some support here. Again, this is a monthly chart, okay? Oh, the GoToWebinar cursor. Okay, I'm not sure how to exactly change that. If you know how to change that, I'd be happy to. Is that something where if you know how to change that, let me know, and I'll try to do that. But if we look at Kiwi Dollar quickly, we obviously have been over this, to several webinars, right? But we could get some support here, okay? Again, technically, from a classic technical perspective, you get a double top with the 2011, 2014 highs on a break below 73.70, and the target actually comes in at about 59, which happens to be the 2004, 2006 lows. Looking at slope, we do have possible support right here, right now. Okay, you can see right there. That's what we got. Obviously, I have not suggested exiting the Kiwi Dollar short at this point. I do suggest exiting on a drop into 73.30, and here's why. And that's only if it happens really over the next day or so, okay? Because we've got RB and Z, the thing's been beat up, and if you get, maybe you can see it. Oh, it's not it either. If you get a drop on RB and Z down all the way down to 73.30, then we have risk for one of those kind of sell the news type of deals. So I think this is it right here. If you throw this on there, yeah, this is it. Is it not? Yes. So you can see that this is a daily chart, so it's not going to look all that spectacular here. But we've cut through the bottom of the we've cut through the bottom of the pitchfork, and if you extend a parallel off of the price extreme, which was obviously just 2 days ago, then what happens is that you get this actually comes in. You can see this level right here, when extended off this low, comes in at about 73.30. So, that's why I suggest, putting orders in and whatnot, to get if you get a very extremely favorable fill on an order, you might actually have the opportunity later on to resell, at a better price. And, at that point, you're kind of trading the position. Obviously it's up to you if you do that. I make the suggestion, of course, to do it or not do it or put the order in. So that's kind of what I'm looking at right now with Kiwi, okay? Another thing to look at with the New Zealand dollar right now, we go a little shorter term, 60-minute here or so. Okay, so 60-minute. Again, this is what we've been looking at on the short term. Possible support on that line, which is the one I just showed you. We do have an extremely kind of, it is a weak, feeble bounce, if you will, which is what you want to see. And resistance, RB and Z is an hour after FOMC, okay? So resistance could still come in at this median line. Again, let's talk about the anatomy of an entry, though, right? So it's RB and Z. They've been known to be tricky and whatnot. We do have the possibility of getting a, getting a larger than, I'm always on the kind of lookout what's going to go wrong. If we get a larger than expected rally, because right now this is a full-on breakdown, okay? And again, 73.30 can provide a bounce, but this is a full-on breakdown. But, if that, oftentimes the breakdown or the breakout levels are retested, okay? Obviously, the best breakouts are the ones that don't do that. Those are few and far between. Those are the ones that you find impossible to get into. A lot of that happened last year, okay? When the market breaks out and then you're like, you're kind of conditioned to thinking that you're going to get an entry on the retest of the breakout level, and then it never happens, and the market just continues to go. So, since we had all those breakouts, I wonder if people are now conditioned to want to expect that you're never going to get a retest again. Just kind of thinking from a psychological perspective. But in any case, if we do get a retest, it might be interesting to note that retest could come. You can see this line here, this old trend line, goes back to the mid-November tops, right? All those touch points there, right? Even a little support line there, okay? So if we do get a retest, maybe that comes right there, because the intersection of the intersection of the breakdown level, which is, roughly 76 to 76.20, okay? That comes into play tomorrow, right? And with RB and Z coming in at 3 o'clock today, New York time, so basically right before the close, if we get some action all over the place, maybe you end up testing this thing at 76, and at that point, you might be able to get a really good big reward to risk entry on the short side, increase that position. So that's kind of something that I've got in the back of my mind as far as looking for. So in summary, with Kiwi Dollar, would love for it to just go straight down to 73.30, trigger us, and then come back for another drift and resell it again later. If that doesn't happen and the market trades higher, then we'll keep an eye on for 76 if the reaction is extremely positive. If the reaction is not extremely positive, we've already traded into the resistance that was laid out last night on a short-term basis. Again, not willing to go in at this point on anything extra, but 75.25 could come into play too. So there's really three levels to watch, right? 75.25, which is right here, okay, that median line that I was showing you guys before, 73.30, which is the bottom of the parallel that extends off the lows, which I showed you on the daily chart, and then finally 76, 76, 10 to 76.20, which is the old trend line here with all the arrows on it. And does that thing get anything here? And it's also this median line, actually, pretty close to it at least, right? So that's what we're looking at with Kiwi Dollar. Let's take a look at Kiwi Yen. Did the video on this one so far, getting, kind of, I guess, what we were looking for in terms of a bounce, right? The bounce, what we want to see with Kiwi Yen is, a rally and, some sort of failure up at this point, probably closer to 84.50, 60 than 88, or 89, right? And again, if there's going to be a short position here, I'm not willing to risk anything above 89.31, which is the high from last Thursday. Okay, so what we'll want to see after all is said and done with FOMC and RBNZ, let the dust settle. If this thing swings around, maybe you get, it's very difficult to understand, to fool around with how the market's going to react during FOMC and whatnot. But, if we do start to get some trade up into 88.50, okay, and the market stalls there, you put in, say, some 15-minute reversal bars, you might have an opportunity to get on the short side there, okay? That's something to watch for in Kiwi Yen. Want to look at Euro Aussie. This is going to sound somewhat strange, I guess, but if we're looking at Kiwi Yen on the short side and then Euro Aussie on the long side, they seem like totally opposite things, right? Looking for, actually, well, not really. They're kind of one and the same. What am I talking about? Looking at Euro Aussie on the long side would be long Euro, short Aussie. Looking at Kiwi short side would be short. So you're looking short commodity, okay? So in a sense, the theme is short commodity currencies. So at this point, we've drawn this pitchfork, right? This was put up last night. The slope, yes, I think there's some validity to it. You can see all the touch points here, okay? Went up above here. I said that if the market had, failed to hold this median line, as long as it held here, you could get a zoom higher up all the way up towards this upper parallel. Okay, kind of glad it didn't because it didn't leave us behind. So what we're looking at now is just a messy consolidation. And what you want to look for here is for support down at this level now, okay? Support down here, could come in at 41.20 or so. So this isn't a thing where you put in an order to go long at 41.20. It's something where we want to see the market trade down there and again put in some support bars, right? Some wicks to give us a chance to get long on Euro Aussie. So in a sense, if we're looking at a potential long Euro Aussie and a potential short Kiwi Yen, they're somewhat the same in that Euro on the long side is such a, well, Euro on the short side, such a crowded trade that if there is a full-on washout type of equity move that you're going to get short covering in Euro. We saw that actually yesterday, right? The news was terrible in Greece, blah, blah, blah. S&P opens up down like 30 handles. Dow's down over 300 points. But the Euro was ripping off the lows. So that's the kind of action you could get with the Euro and against the Australian dollar, the Euro against anything for that matter. And with the Kiwi Yen, right, just looking at a full-on Kiwi breakdown. But they both are kind of similar trades, but a little bit of diversification, if you will, because say the Aussie falls more than the Kiwi, blah, 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 will benefit on Euro Aussie. So looking at 41.20, okay, it's just the 61.8 of this. I know this is a really ugly rally. It could be that this is a triangle, but in my time trading, I've seen the Euro Aussie and Yen crosses and look like they were in triangles, okay, only to burst out the opposite direction and surprise the heck out of everybody. Okay, I've seen it time and time again. So everyone tells you that triangle has to be a continuation pattern. It has to lead to the downside because the prior trend's down. It doesn't have to do anything, okay? So, again, this is one of those instances where we have reward to risk heavily skewed on the upside, okay? Getting some reversal bars on the daily down here, right? Euro Aussie, the synthetic vol indicator was actually the highest that it had been all the way, it looks like all the way since 2010, also around the European credit crisis down here, okay? So we're going to play for one of these moves in which we can potentially get an extremely quick, fast and furious, short covering advance type of deal with the euro. And finally, I do want to take a peek. We might as well take a look at the dollar yen. I'm sticking with the idea that we've got a triangle here, A, B, C, D, E. Implication, we continue to hold up on this thing, by the way. Implication being that we get a thrust higher, this thing goes up to 119.10 or so, and then rolls over. So that's kind of what I'm looking at with euro yen, right? As explained last night in the update. Obviously, the implications here are going to be quite grand for the yen trades we're looking at, right? If this does work out, then hopefully we're not stopped out on euro or on euro yen on a spike, and euro yen goes up, hits some targets, and at the same time we're able to short Kiwi yen on this. Something that could very well happen. So keep that scenario in the back of your mind, right? Triangle from the 20th, thrust higher, everyone gets jacked up, this thing's going a lot higher, right? And then it reverses and heads lower again. Something to watch for. Looking at euro dollar, can't stress enough just how big of a giant price level this thing's at. Remember, I started the week putting this up, and I just had an exclamation point and a question mark. Just how insane this has been, right? The decline has been breathtaking. I think that, look, if we're able to hold up for the next few days, we're going to put in a weekly reversal bar again. And if we do that, the next resistance is probably this median line. And I mean, the big resistance, right? The big resistance is actually going to be upwards of this median line, which, could be as high as 118, 119. Sounds nuts, okay? But just saying. Here's Sandeep asking about seasonalities. So euro dollar seasonality actually turns positive after next week. Sorry, not after next week. Actually, it is next week. After the week of February 6th, okay? Dollar yen seasonality is actually bullish now, okay? Again, these are parts of the, something you want to watch. It's not the end-all, be-all, because there's plenty of times where the market goes the other direction, right? With dollar yen right now, what you'd be looking for the seasonality portion of this is that you'd be looking for it to, has it been following seasonality, right? And, at times last year it did. Obviously, it followed very well from October on because the October seasonal low was due in mid-October. Obviously what happened, low was like on 10/15, October 15th. Okay, and that's why I put in the writing on the swing page that, look, if dollar yen is able to break out and it holds, it closes up above these dollar yen, it closes up above these levels here. Here's the daily chart. If dollar yen gets up here, right, this is at 119.10 today right here. Okay, so we're looking at triangle, terminal thrust higher, and then for this thing to reverse lower for a larger decline. If this thing reverses and goes higher and closes up here, right, finishes the week up here super strong, then we can kind of throw this out the window, I think, because the seasonality is strong. So that's what I'm saying. I'm not going to be stubborn and hold a dollar yen bearish bias for this larger pullback if, the market says it's not going to happen because we are in a seasonally strong period for dollar yen, right? If that happens, then hopefully we'll benefit in euro yen as well, okay? So, it's a little piece of the puzzle. It's not the end-all be-all by any means because there are plenty of times where the seasonality totally fails. But, yeah, it is a concern. Okay. Now, with the euro dollar, it's interesting because, the euro is coming in to a seasonally bullish period, and it's about as extreme on the downside sentiment and momentum-wise as we've ever seen. So that is one reason to be very cautious on additional euro downside in the very near term. By that, I mean the next few days and all that, next few weeks. All right, so Mike is going to be joining us here in just a moment. Chris says, any comments on your up and down pal Max? Yeah, it's been a money pit. It's probably stupid to trade that thing right now. I'm quite annoyed to be honest. Okay. Quite annoyed to be honest on the Mexican peso. I mean, here we are too. We nailed resistance. Probably wasn't a very well-timed entry, to be quite honest. Stefan says F dollar Mex. I am with you, my friend Stefan. No doubt about it. Let's stick with the money makers right now, right? Some yen crosses, euro yen, all that. So Mike's going to get on the mic here and take you through FOMC, which is going to start in just about 10 minutes.
Hey guys, how'd the session go?
And I think he'll have some charts up and whatnot as well. But with us, with what I'm doing right now, right? I'm long euro yen, got the stop real tight. Hopefully it doesn't get hit. Kiwi dollar, still short. We pay attention to those levels I mentioned earlier and how the market acts around them. Other than that, kind of laying low, laying in the weeds, ready to stalk as opportunities arise, including that Euro Aussie Kiwi yen. Brian, trying to rally. It is trying to rally, try to get that terminal thrust. All right, so I'm going to give you the mic now. Here you go.
Right on. Thanks for that, Jamie. Guys, good to be with you here. Good to be with you here for live coverage of the FOMC interest rate decision just out in 10 minutes. So I have some live near-term charts up, guys. We'll be watching with the 5 minutes due as we get the release. Again, the devil's in the details. We're not going to get, it's not going to get those quarterly releases or anything, guys. It's going to be just the policy statement. So we'll comb through that policy statement. We'll see if there's any shifts. Remember, we've lost two dissenters or two known hawks. So if it does come out with a little bit more of a dovish stance to it, with where the dollar index is trading at right now, we talked about this in this morning's webinar, you could see some pullback there. So the release is out in just a couple of minutes. If you guys have any questions, trade setups, pairs you want to look at, feel free to let me know. We have a couple of different bank research feeds ahead of us, so I'll be able to kind of give you some reiteration of what they think is going on here. Okay, and again, just under 8 minutes to go. And on the research headlines, guys, you may not have heard or may have heard already, S&P did downgrade Greece's outlook to negative. B rating stays, so better late than never with those S&P downgrades. At least we're on the same page. Question from Stefan saying, if even the slightest pullback from the hawkish sentiment, do you see a massive squeeze on the euro dollar? I don't think if it's that soft. I don't think necessarily if it's the slightest pullback, I would say, Stefan. I think we're expecting to see that just because of where the committee stands right now as far as the voting side. You know, you have those dissenters who have been fighting to sort of wrap up QE, begin the normalization process. They're both gone, right? So it's likely that we'll see a little bit more of a dovish hint to it. If you're saying if it's hawkish, yeah, no, if it's hawkish, you could for sure. You could see the euro fall right back apart. So remember where we are, guys. The tweet I put out on Sunday night on the open when we were coming off of this major key level at 110.95, which is a 100% extension from the 2011 highs. You know, from where we are, nothing really changes for me. When I'm near-term trading this, guys, everything stays the same unless there's something to invalidate it. So I don't care that we're going into FOMC. At the end of the day, we broke above 112.13. That was the bullish invalidation level. I still think that that remains, again, on account of the 2618 from the decline off the highs you made in October. You also had a 618 retracement. This dates all the way back to the lows you made back in 2000 or the 2000 low. And then obviously the lower median bound or lower median line parallel all coincides there. So Stefan, to answer your question, even if we get a pullback into this region, this is, in my personal humble opinion, the bullish invalidation level. So if it comes out a lot more dovish, let's say, and they say that, you know, obviously the durable goods orders we got yesterday were dismal, but the inflation numbers have continued to be lackluster, guys. I mean, remember, the Fed's got a dual mandate, fostering maximum employment, price stability. The unemployment numbers have continued to surpass expectations from their part. And it's pretty much the focus is on the inflation, which continues to be real lackluster. Now, some of that is due to the weaker prices that we're seeing in energy and crude and whatnot, but it's going to be interesting to see if they feel it comfortable enough to start prepping the markets for normalization, which, in my humble opinion, is the case, but my opinion doesn't matter. What matters is the market reaction, and we'll see how that hits in just a couple of minutes here, guys, just under 5 minutes. Stefan saying, thanks, everything is a matter of degree. Yeah. I mean, again, remember, as we head into this print, guys, here's what the Credit Suisse overnight swaps look like. Credit Suisse overnight swaps, just for your reiteration, again, is just a gauge of what the market is factoring in as far as interest rates from the major central banks. So if we look here at the U.S., there's still a 0% chance we're going to get a cut next month. Okay, or tomorrow, or today rather, excuse me. 12 month out, the expectation is still for 58 basis points in additional rate hikes from the Fed. So this is what we'll be looking at, to see any shifts. If the Credit Suisse overnight swaps start pushing this out and all of a sudden you see this 58 dropped into 40, okay, then it's a tell that the market has began to pare back some of those expectations that we might see them move mid-2015, third quarter 2015. Interestingly enough, heading into the RBNZ, there's really not much of an expectation, about a 6% chance that we'll see a 25 basis point cut tonight from the RBNZ. Expectations, 12 months, is looking for 9 basis points lower. So, you know, I don't put too much emphasis on these guys. It is just a sentiment gauge, but certainly can be a tell when you see larger fluctuations. On the Aussie, which will be interesting heading to next week's RBA interest rate decision, you know, market expectations are for a 43 basis point cut to the main headline rate there over the next 12 months. Next week is about a 12% chance for a 25 basis point cut. So with that in mind, you know, we will see what kind of rhetoric we get from them today. Stefan says, your opinion matters to me. I pay for it. LOL. Right on. And you'll always get it, Stefan. I just got to prompt you. So about 3 minutes out here. Ahead of those releases, quick look, guys, at again those 5-minute charts we'll be watching on the euro, not necessarily the euro pound. I don't know why that one's there. There's the pound dollar. Pound Aussie, I'm actually writing a piece on for Daily FX now. That'll be out later today, guys. As soon as we get through the release, I'll show you a sneak peek of that if you have time. And dollar yen, obviously, with the setup we've been working on the scalp charts. Here's what the dollar yen 30-minute looks like still. Whoops, that's Kiwi yen. Still looking for this short to break out too, guys. If the opening range for the week gives us a topside break, I am looking at 88.65. I'm looking at 88.90 as possible entries to get back on the short side. Topside break there, you probably see 90, but the end of the day, I do like the broader downside sloping sort of trajectory here for Kiwi yen, but dollar yen looks like this. So no trade since what we reviewed this morning. Okay, in just a couple of minutes here, guys. So we'll go through and we'll give you the highlights that are hitting the terminals first. Those will most of the time begin to kind of give us an idea for what the tone of the actual policy statement is, and then we'll take a quick delve right into the policy statement and see what we can ascertain there for ourselves. All right, and the countdown is upon us, my friends, about 60 seconds out. Again, if there are any comments, questions, feel free. Dale says, I'm never on the right side of these releases. If you can get a chance, can you tweet or show the command sequence to access that Bloomberg screen? Sure, please. Garrick, it's CSST space 10, then click global request. CSST 10. Is the function for Bloomberg. Cheers, mate. All right, 30 seconds out. You can see some dollar taking, or profit taking, giving us a little bit of a squeeze here. So the Aussie dollar upside, the Euro dollar upside will be the go-tos on a weak dollar story. On a strong dollar story, I wouldn't necessarily still be too interested in the euro just yet, but here's the release, guys. Just 5 seconds. Kiwi dollar also, watch for the downside there if we do get a break on dollar strength. Okay, Fed policy assessment, inflation to rise gradually. Policy assessment to weigh international developments, leaves federal funds rate target between 0.25%. Repeats, it can be patient to start raising rates. So a little bit more of a dovish tone. But nonetheless, you're seeing the initial reaction here for dollar strength. Just keep on board, guys. Want to wait this out and let the dust settle. It says Fed expects inflation to rise gradually towards the 2%. Fed to conduct term RRP tests in coming months to test the term. By the way, that's the reverse repurchasing agreement. As an additional policy tool, vote of 10-0 for Fed funds rate action. Keeps Feds at 0.25%. We said that. Energy price declines have boosted household purchasing power. Fed expects inflation to rise gradually towards the 2% over the medium term. Inflation anticipated to decline further in the near term. Survey-based measures of longer-term expectations for inflation remain stable. The market-based inflation compensation measures declined substantially, and inflation has declined further, largely reflecting energy price decline. So we talked about that earlier here, guys. This seems a little bit more dovish than hawkish, which is why that initial reaction there that saw dollar strength, I'm very timid on. To keep on going here, it says labor market conditions have improved further, quote-unquote, strong job gains. Economy expanded at a solid pace. That's a quote on solid. It's the first time we've seen them note something to that magnitude as far as qualitative. Fed pledge signals no rate increase until at least June. Fed maintains a pledge to be patient in the beginning to raise rates. So that's sort of the main headlines you've been seeing hit the wires right now, guys. Dollar yen looks like a split decision so far. The index is what I'll be focused on as we continue to pull off that major high we talked about in this morning's webinar. And on the 5-minute charts here, if anything, I would expect to see that we could see the dollar take a little bit of a back footer here. Quick look back at the CSST, see if that Credit Suisse swaps have changed at all. Okay, No change. So again, if we look at the Credit Suisse overnight swaps, guys, no change here as far as the 12-month expectation. So obviously, there's still no change to that, but the 12-month expectation is holding steady at 58 basis points. This 10 here means that that 58 basis point is reflecting a change of 10 basis points over the last few days. So right off the bat, it looks like market expectations were increasing heading into today, the amount of interest rate hikes we expect from the Fed. I don't think that this policy statement necessarily confirms that. Here's what the statement says head to toe. By the way, if you'd like to follow along and read that statement for yourself, guys, the link is provided for you right in the chat box below. But it reads as follows. Information received from the Federal Market Committee in December suggests that the economic activity has expanded at a solid pace. Labor market conditions have improved further with strong job gains and lower unemployment rate. On balance, a range of labor market indicators suggest the underutilization of the labor market's resources continue to diminish. Household spending is rising moderately. Recent declines in energy prices have boosted household purchasing power. Business fixed investment is advancing while the recovery in the housing sector remains slow. Inflation has declined further below the committee's long-run objective, largely reflecting declines in energy prices. Market-based measures of inflation compensation have declined substantially in recent months. Survey-based measures of longer-term inflation expectations have remained stable. Consistent to the statutory mandate, the committee seeks to foster maximum employment and price stability. The committee expects that, with appropriate policy accommodation, economic activity will expand at a moderate pace, with labor market indicators continuing to improve towards levels that the committee judges consistent with its dual mandate. The committee continues to see the risk to the outlook for economic activity and labor markets as nearly balanced. Inflation is anticipated to decline further in the near term, but the committee expects inflation to rise gradually towards 2% over the medium term as the labor market improves further and the transitory effects of lower energy prices and other factors dissipate. The committee continues to monitor inflation developments closely. Here's the meat of it. To support continued progress towards maximum employment and price stability, the committee reaffirmed its view that the 0 to 1/4% interest rate target for the federal funds rate remains appropriate. In determining how long to maintain this range, the committee will assess progress, both realized and expected, towards the objective of maximum employment and 2% inflation. This assessment will take into account a wide range of information, including measures of labor market conditions, indicators of inflation pressures and inflation expectations, and readings on financial and international developments. Based on its current assessment, the committee judges that it can be patient in the beginning to normalize the stance of monetary policy. However, if incoming information indicates faster progress toward the committee's employment and inflation objectives, then the committee now expects the increases in the target rate for the federal funds rate are likely to occur sooner than currently anticipated. Conversely, if the progress proves slower than expected, the increase in the target range will likely occur at a later than currently expected. I'm not going to read the rest because it's all fluff, but guys, that's pretty much the status quo, okay? Don't necessarily think there's any major shift to expectations of Fed tightening this year. Remember, they keep it open. You know, although they've been arguing that this is more transparent and they're trying to be as transparent as they can, this is pretty much as wishy-washy as it gets. You know what I mean? If things get better, we'll raise sooner. If things get worse, we'll raise, further out. That does nothing to give the market indication. That does nothing to give market expectations of actual Fed funds rates. So this is the result. Okay, it's neither as bearish, I think, or as hawkish, or as dovish as people would have expected now with the new policy or committee count. But at the same respect, it keeps that ability for the Fed to do essentially whatever it wants, raise now or raise later. So on whole, guys, it's pretty balanced from my take here. Let's see if there's anything else hitting the wires to suggest otherwise. U.S. stocks extend gains after Fed statement. Dow Jones up 65 versus up 34 previously, so we did see risk take a step higher here. And the 10-0 vote really suggests that everyone's on the same page there, guys. Mike, had a stop on Euro Yen short at 133.20. Didn't get hit even though it went through 133.03. I'm glad it didn't, but is this normal? Okay, I think you have a typo there. I think you mean it went through 133.30, not 03, because I was trying to understand what you meant. Yeah, if it went, it could be just the spreads blowing out. When we get these releases, guys, it's very, very regular on even institutional desks, even when we were trading on the managed accounts on the future side, or whether it's an FX brokerage. Liquidity is always going to be an issue, and sometimes the spread widen out. Oh, Pooja says the spread was wide, I think. Yeah, so Pooja just giving her 2 cents as well. Probably what it is, Dale, on that front. Okay, but again, I'm a little disappointed that we really didn't get the lackluster, or didn't really get the moves that we're looking for. Remember, the base case scenario heading into this, guys, was dollar weakness. So that's what I'm going to move forward with. I don't think this changes anything. The technical picture still looks pretty toppy for the dollar near term. So I'm still a favor of the dollar yen short. I'm still a favor of the euro dollar long. The com block not quite as, well, it looks like it's starting to pan out here at least. Okay, so the euro range highs for the session of the U.S. trade, guys, come in right around 113.65, where it looks like we're pushing through it now. So if that does break on essence and in its own right, the U.S. opening range would be constructive there for the euro. Here's what the scalp chart looks like from what we were looking at this morning. Okay, coming into this, we're looking at 113.20, 113.18 as near-term support. The trade remains constructive, in my personal opinion, above 112.18, 112.20. We talked about that. Momentum signature here, even on the attempted break below near-term support. Perfect bounce at 40 keeps the objective on the long side, and in fact, looks like you might have a trigger that's in play right about now. Stops would have to be against this swing low for the 30-minute candle here. Break above 113.92, you look for 114.56. Now that is larger than the 35 pip ATR we would be looking at per scalp. So just keep that in mind, guys. It's okay to ride out the trade. You always want to hold on to those winners, but as if you're adhering to my strategy, at least at 35 pips, you need to do something. You don't have to close the entire trade, but to make sure that you're doing something to wrap that up. As a disclaimer, I haven't taken anything, guys. I'm unlikely to actually take a position right now. I'm not really convinced that we saw such a huge discrepancy from what the markets were expecting as far as the release here today. A lot of times we'll have to let the dust clear, the clouds settle here. We'll see what Asia Pac does for some of these majors here. Okay, so it's still the level to be here for the pound as well as that 152 handle, just above 152.05 or so. Gert says, hi, Mike. If you have a quick minute, look at U.S. oil. I have Andrew's pitchfork from said dates. Let me bring that up for you. Oh, no play on gold even. That's a tell that the market's not really moving on this news. What are we looking for here for Gert? What was that? Oil. Okay. He says, yeah, I have Andrew's pitchfork from 115. Okay, what time frame are you looking at? Probably a 30-minute? $115, $120, $122. $115, 120 and 122. Gotcha. I'm with you. Looks beautiful. It's exactly what I'd be working with. Right on. Right on. Now what you can do, and again, this is something, take some practice, but you won't hear this on the Andrews Pitchfork courses that you see online or anything, but it's a study of slope, guys. So what we do is we just mirror that slope, okay? And if we mirror it to the inside, a lot of times you'll find that these will also continue to catch levels on their own, especially for major highs, major lows. I'll show you one in what pair was that I was looking at today. One of the dollar crosses in a moment. But in general, that's what I'd be working with. Looks good. Looks good. The problem with this, Gert, and what I said earlier in the webinar this morning when you guys were asking about it, is that I think the crude trade's a little stretched here. So it's a downside bias. It's a descending pitchfork, so you're obviously looking lower. But that 1998 sloping line, actually, that broke. If we stretch this out and it snaps the reference points, you'll see that that actually broke. La-di-da-di-da. There it goes. Okay, and the fact that that 47.70, 47 level was so huge has me a little concerned of trying to press any fresh shorts, even on a scalp basis from here. The snapback is likely to be pretty wicked on this, A, and B, you've been getting some ongoing divergence. Ever since the low in December. Lower low, lower low, lower low, on a close basis, right? Lower low, series of higher lows. So for me, when the daily chart is blatantly against what the near term is saying, I kind of will just take a side seat. Does that make sense, Gert? As far as the validity of the pitchfork you're using, right on. I don't see any problems with that one. Good eye. He says, cheers, Mike. Missed that earlier session. No worries. By the way, guys, we're pros at remembering to record now. So for any of the sessions, you will see them recorded. Okay, let's take more of your questions here. Gert saying, looking at a take profit of 43.15, stop at 46, entry of 45.56. Yeah, you could. I wouldn't. Let me take a step back. I'm trying to say too much and I couldn't even get it out. Gert, for me, all the profit targets for scalps are going to be on the inside. So if we take this quick measure right here, this actually puts the pitchfork right around 43.20. So I put my levels on the inside. I'd have it, right around 43.30, 43.35, 15 pips out. Just remember that you don't, and Gert, I can't necessarily tell you not to do this if it's working for you, but for me personally, I'll never take a scalp into a fresh low, per se, unless that low is broken. Do you know what I mean? So even with the entry on that one, if we just hold the lows so far for the year, you're not going anywhere. Do you know what I mean? Whereas if entry was somewhere around here and your target was the lows, that makes sense, a test of the target. But I will never take a scalp on a determinate break through that necessitates, rather, a breakthrough support or resistance. So just a quick note. Hope that helps. Adria says, yes, I live for recordings. Hey, Kurt says, noted, thanks, and more than welcome. Sandeep, could we take a look at dollar yen? Any ideas? So dollar yen, I'm still favoring the shorts, really. We reviewed this in this morning's webinar. Oh, okay, and that's a definitive move right there. So let me bring up the near-term charts once more real quick. So here's the dollar yen. The thing that you want to play on these types of moves, guys, is this is where you want to utilize the session opening ranges, the daily opening ranges, and trying to ascertain what the market's doing on an event risk release. If we take a look at this and we bring up the trade sessions indicator, here is the open of U.S. trade. Okay, so the U.S. trade opening range high was right here at 117.90. Okay, trade session opening range U.S. low was right here at 117.65. Okay, once that range gives out, just for the session of U.S., you have a directional bias. The fact that we cleared and tested the opening range high and that held, we're breaking the opening range low right now, gives us a near-term downside bias heading into the end of the session for U.S. Does that make sense? Let's bring up the 5-minute. Okay, we're testing the Asia, or excuse me, this is the European lows. Okay, so here's the opening range U.S. high. Here's the opening range U.S. low. Here's the open of U.S. trade. Okay, so if we just remove this indicator now, that's your opening range for U.S. 117.92, 117.63. As long as we stay below this, you look lower. Objectively, guys, this is a study of price action, pure and simple. I'm not talking about trend lines. We're not talking about Fibonacci. We're talking about just pure price movement. So for me, near term, I'd want to be bearish against this high, okay, while below 117.65. If we break back above this, it doesn't necessarily mean you're bullish. It just means you're not bearish. Very big difference in that. It's the break above 117.92 that would put me more in a constructive approach heading towards the Asian session tonight. Does that help? Guys, quick note there. So also one thing you want to note while we're trying to make these assertions on what the market reaction is the high and low that we set for the opening range of U.S. has been accompanied with a 40-60 hold in momentum. So even once price clears the opening range for the session, we want momentum, likewise, to clear that 40-60 range. Okay, so that's why for these trades, guys, a lot of times someone will ask me, are you trading FOMC, are you trading NFP? Sure, but the trade might not come for an hour afterwards even. Okay, it really depends. A lot of times what the release will do, guys, it'll set the parameters for what the trade will be. Does that make sense? So when the market reacts to the data comes out on a release, you see a high or low set or a challenged high or low set. Now you have the parameters by which to say, all right, if this level gives out, we're done. We're looking this direction, or vice versa. So I hope that gives some, some flavor there. So this is a perfect example of why, you want to be a little bit more cautious. It looked like it was breaking the opening range. Momentum at the time looked like it was below 60 or 40 rather, but the candle close hadn't materialized. And here, as the candle closed, that last 5-minute candle, we held 40 support. So I'm not really sure, guys, that there's necessarily, going to be a play on this release. You've got to keep in mind that we still have major event risk later this week on Friday with the fourth quarter advanced GDP read. Remember, the third quarter read gave us a 5% growth in the United States. So certainly expectations for this read are not quite as high. But if there's any downward revision, that's the biggest risk for the dollar. So let's take a quick look at what the event risk looks like for the greenback heading into the end of the week. Obviously, next week, tomorrow, initial jobs claims not that big, but pending home sales with what we've seen the Fed continue to suggest that the housing recovery remains lackluster. Here's the main event for the week, now that FOMC is out of the way. 5%, okay? Not necessarily going to be the 3.1, but if this 5% is reduced to anything, again, this is just conjecture, but anything sub 4.5%, I think you see a major reaction in that maybe the economy is not quite at the strength of the trajectory or glide slope that the Fed would need to feel comfortable beginning the normalization process. So we'll see if there's any downward revisions to that 5% number. Obviously, the 3.1 expected, we'll see the variation off of that. But even so, that day you still get the University of Michigan confidence survey on Friday as well. 98.2 was, if I'm not mistaken, a pretty recent high. I don't think we've seen that since 2005, was it? 98.3. 2003, literally. Okay, so you're basically looking at like a 10-year high in consumer confidence as you head into that Friday print. So you could see a scenario where either you stronger print on GDP and a stronger consumer confidence gives the dollar the push it needs to get through this resistance level, i.e. the highs they made in 2009. Keep in mind, again, the upper median line parallels right there. So the implications on a push and a breakthrough 11,850, it's pretty big. Okay, we're not going to be talking about a little blip here. If this gives out, especially on a weekly close, you're looking much higher. My next level isn't until this major longer dated 100% extension off the lows from 2011. That's like 12,050. So major resistance here as we head into that Friday print for the greenback. On the flip side of that, again, if it's a miss on GDP and consumer confidence comes off those highs, that'd be a perfect recipe for a little bit of a correction here. One thing we want to start to look at, guys, and it's always important to put things in perspective again. My expectations, Jamie's expectations, what we hope or think is going to happen doesn't mean anything. Well, all that matters with the fundamental, with what the technicals are telling us. And right now, as you head into that release, you have to keep in mind that the opening range for the month, objectively, for the dollar index, broke to the upside right here on the 22nd. And the dollar's been rallying way longer, but a study, a pure price action study, keeps us constructive above 11,700. Well, it just so happens that over the next couple of days, that also coincides with a nice basic channel support of October. So this is the invalidation level, and this is what, in my mind, would give us conviction or validate a near-term turn in the greenback, or this is specifically the Dow Jones FXCM dollar index. All right, so some proof of thought there on the dollar. Garrick, great to see you in the room, sir, says, haven't caught too many of your webinars. I'm familiar with Jamie from JS Trade Desk. Is there any particular place where you discuss your trade hunting methodology in detail and the overall strategy? Garrick, I've done daily webinars on daily FX for the last 5 years. I can't necessarily say there's a specific one that goes over the entire strategy. We do a webinar every morning here, Tuesday through Thursday, Garrick, on SB Trade Desk at 8:30 Eastern, where we go over all the scalp setups that you'll see featured on the scalp page. I definitely encourage you to come to those sessions. Let me know if you have any specific questions. You're in the right place. There was a go-to series of strategy recordings I had made back in 2010, but they've since been removed from YouTube, Garrick. So I haven't necessarily gotten a chance to make a whole new how-to movie yet. But Garrick, the strategy sessions are there for your benefit in the morning. So definitely, feel free to let me know if you have any questions on strategy or anything as far as that's concerned in those sessions. Or here right now, Garrick, if you have any specific questions, feel free. Where do you get that trade sessions indicator? Dale asked. I'm not sure if it's FX Codebase or FXCMapps.com. I'll find out for you in just a moment, buddy. There is one on FX Codebase. I'm not sure it's the same one I'm using. New high in dollar CAD. A quick note there from Alex. Yeah, listen, dollar CAD I haven't touched in months, I want to say. If you guys recall, for those of you who've been following me on Daily FX, back in November, we actually took a pretty strong stance to try to play the downside of dollar CAD. That was after it's right here. That was after completion of a nice sweet 1618 extension off the low. You had a nice high to trade against. And it didn't pan out. I mean, don't get me wrong, the scalps did all right for the majority of the month because everyone was trying to get long and their mother on every pullback to the dollar CAD because it's such a stretch trade. But that was the last time I traded it, to be honest with you. The breakout of the opening range for December had me on the sidelines, especially the way December closed. This month, I'm not even going to try to counter-trend trade that, and even on the pullbacks, they've been so narrow and short-lived that there's just been no conviction on my end to try to trade this. So, the upside targets from here, guys, are far in between, especially for a scalper like me. There's nothing in near-term price action or historic data for me to actually point to for reference. Maybe 126.45. Obviously, the 2005 high, just above that, comes into level. It's tough. For a scalper on a trade this stretched, guys, it's just gambling. You're just trying to chase. So I'm going to default that to, the swing trades. Not really my cup of tea at these levels. Once we make a high, see some consolidation, get some back and forth action, I'm all on it. I'm all on it, Alex. But on a stretch like this, man, trying to scalp it is. I've been burned doing this a lot. Let's just say that early in the career, so I don't really want to necessarily stress that right now. Hey, Dale, it's in fxcmapps.com. If you're looking for those trade sessions indicator. Hope that helps, brother. Oh, Gert and Adrius answered that question for me earlier. Jeez, I should pay more attention. Sorry about that, guys. I appreciate that. Garrick says, cool. I will try to rewatch them each day. Cheers, mate. And again, feel free, Garrick, in the webinars to shoot any questions, anything's on the table, guys. Nothing off limits at SB. Sandeep says, yep, I see the pick got into a short at 118.20 and considering to close it at the CMP. I think you mean the center median line parallel. I mean, don't get me wrong. I'm favoring the downside in general for dollar CAD. If you guys remember, or if you go to the intraday page, we're bearish. The invalidation level was brought down to 118 again. So as long as we stay below this threshold, which again will necessitate a break back above the lower median line parallel, that helps. That helps. Let's see that 40 break in momentum, both on this 30-minute chart and on this 5-minute chart. Looks like we'll get it. Again, any stops you take, guys, should be against that swing high. I know it's a little bit farther out at this point. If you miss the initial break, don't chase. Wait for the pullback. It's going to probably test that opening range again as resistance, and that's when we'll get the entry to get back on the shorts here. Looking through some of the other scalp setups we've been following, the euro dollar, we're still waiting on a range break, either sub 113.18 or above 113.85. Aussie dollar. I don't think I even have that set up. Nope. And here's a quick look, guys, before we end the session. On the scalp report you'll see published on Daily FX later today. It's on the Sterling Aus. Listen, it's been a great trade. At the end of the day, we're back at the resistance level that we looked at late last year, okay? We're still within the confines of this nice ascending channel formation, and the break that we made earlier this week above the median line has us constructive near term above the 190 handle, essentially. Now, the opening range for the week is what's in focus. Today constitutes an outside day reversal, meaning we've taken out yesterday's highs, we've taken out yesterday's lows, and the candle is a down candle. This is after a 3-day stretch to the upside into an exhaustion range, okay? 191.84 is the 2014 high day close that was made in December, and 192.25, well, that's just a basic 38.2 retracement from the decline off the highs that you made in 2008. Okay. Also, keep in mind that that same range, guys, of resistance where we are right now is also the high that we made last year in 2014 before that final December push. So either way you look at it, the focus right now is on the weekly opening range, which is taking shape just below this rate. And here's what the scalp setup is going to look like. Okay, so here's your weekly open. Your weekly high came into the 88.6 of a near-term decline. That's 91.95. The opening range low came in at the 618. That's 89.36. And basically the focus is on a break of the weekly opening range. Okay, a topside break, we're still in the confines of this nice ascending channel formation. Okay, or ascending pitchfork, whatever you want to call it. If we break through the upper median line parallel, we're looking on the run right into the stretch highs from last year, 93.05 to 93.27. And if that breaks, guys, it's really open, open realm. There's a lot of room. There's a lot of room. Initial soft targets at 95, and you really got to go to the daily chart to find anything beyond that. A longer-term prospect does put into view 96.92 and a 100% extension at 97.50. Okay, so you're coming to a major area of resistance. Bottom line, if the opening range for the week breaks to the downside, we're playing those shorts back into lower median line parallel, back into 87.65. A topside break, you got targets at 93.25 and yonder above. Remember, if the range seems big and you're probably asking yourself, what the hell are you talking about, Mike? This is not a scalp. Guys, This is one of the largest ATRs at 226 pips on a daily basis. Okay, so it is a wide range scalp, and per scalp you're looking for about 57 pips. So there's room. The opening range is big, but so will our profit targets be as well. So I just wanted to give you guys a heads up. This will be published in probably about 30-40 minutes here on Daily FX. I will tweet it on SB Squawk, and we will put the scalp chart on the intraday trade so we can follow this one as well. Brian C. says, do you give more weight to the natural day opening range or the session opening range? I know people build systems just around opening ranges, Brian. So yeah, Brian, I just want to say one thing. All the tools that I use as far as scalping are taking at face value, okay? So for me, I will never take a trade just based purely on opening ranges or purely on a trigger break or purely on a divergent signal. All those need to mesh together, okay, to make a trade, guys. So, when someone says, we just broke the opening range, are you long? I don't know. Is there a trigger break there too? Is there a formation or divergent momentum that's adding to it? Did we just clear a major key trend line or support or resistance? So I don't necessarily add more weight to this or more weight to this, Brian, is when that occurrence is happening, when I see a session opening range break or a daily opening range break, what's price action doing? Is there something here that's telling me something besides just what the price action is doing or besides just what the opening range is saying? Does that make sense? To answer your question bluntly, though, Brian, I do put a little bit more emphasis on the opening range for each session when intraday trading, okay? I don't really use a natural day opening range per se, Brian. I like to use the session opening ranges. Then beyond sessions, I typically will go right to the weekly opening range, meaning you look for that Monday, Tuesday range to set some sort of high-low for you to work off of. To go even granular to that, to add to that comment, Brian, you can go into hourly opening ranges, and that's something I actually do pay attention to when I'm in the trade, right? So if I'm in a trade and I'm holding a long, and the long is coming into resistance, next hour is here, there's no reason for me to get out, but now all of a sudden the 3 o'clock hour opening range broke to the downside. Well, then I start to bring up my stops to the next levels and kind of preparing for a possible turnover. So you can definitely take that strategy to all different types of you can go as granular as you want, Brian. It's been definitely a benefit to my trading over the years. So hope that helps. Good question. He says, okay, cool, thanks. Yep. All right. Chris says, do you discuss specific entries, exits like Jamie does? I understand you're working a shorter time frame. Yeah, Chris, so we can't necessarily do it, guys. I would love to. I got nothing to hide. I just can't necessarily do that on a scalp-to-scalp basis, and here's why. Look, these levels are here for your benefit, guys, and you can use them in such a plethora of different various ways. You can take a wide array of different stances using the levels I provide. Someone who, for me, I might be looking for a short exposure here. Someone else might be long with a break of one opening range, so they would be looking to close positions there. With the same respect, the near-term nature of the strategy, guys, there's a lot of times you need to make split decisions and sort of adjust, tweak what you're looking to do. And for me, guys, to effectively trade and be able to put each one of those out on Twitter, it's just not feasible. And then it starts to affect my trade, which is going to be bad for everyone, right? So I do give you the bias, the scalp levels, and the invalidation levels. So Chris, you know exactly what I'm thinking, exactly what bias I'm looking to play, and what levels I'm looking at. The entries I will leave to you guys, but again, daily in the webinars, we go over triggers, we go over different tools that we use to try to give us those triggers on entries. So I hope that helps, Chris. I hope that clears up that question. He says, sounds good. Thanks. More than welcome, sir. Dale says, thank you so much. More than welcome to you as well. Got to go. Hopefully see you tomorrow. Take care. Gert, same to you. Where do you delineate weekly opening ranges time-wise? So, Garrick, it's not necessarily, and this goes across the board, guys, with opening ranges. It's not necessarily the time frame that I want to stress the most, more so price action. So, for example, Garrick, if on the open of the week, a high and low is set on Monday, Tuesday, great, okay? But that doesn't mean that I'm going to strictly adhere to that. Here's a perfect example. Monday, Tuesday opening range was set. We blasted through that, so we were looking higher. Does this invalidate the upside of the trade? No. It just suggests that maybe the opening range needed to that Wednesday. So price action is more important. On average, Garrick, from my personal experience, the opening ranges that seem to work best are the ones that pan out between a Sunday, Tuesday type of range. So your Sunday sets a low or a high in Asia Pac. U.S. trade session sets the opposite side of that range. And as you head into the Monday night, Tuesday morning Asia sesh, then you're looking at a range that has more definitive high lows. And typically a late Tuesday break of the range will be what works best for me. But I don't want to stress it. If there's a very clean opening range that sets forth, on a Sunday in and of itself, I'll play that directional break. So we just want to make sure that we're stressing more price action than time. So I hope that offers some clarity on that. Adria says, all right, thanks again for all your help. Enjoy your weekend, Mike. Adria, same to you. Or enjoy your evening, rather. Garrick says, yes, thanks. And Chris says, sounds good. All right, guys. So I think I've exhausted your questions here. I hope you found this session helpful. Again, watch the dollar, guys. We're going to look for follow-through in Asia Pac. And the basic theme here is, do we get dollar recovery, or does this leave status quo with nothing changed as far as the outlook is for the greenback? Still trying to get that dollar chart up. All right, so this is what we'll be focused on. And again, the premise since the start of the week, and will continue to be bearish invalidation with a move above 11,854. Bullish invalidation with a breakback below the opening range high for the month, which sets right here. And Chris, as per your question, here's another perfect example of the monthly opening range, right? So this opening range didn't get cleared until the 22nd. So you might be thinking to yourself, Mike, well, that's not really an opening range, right? 22nd of the month is pretty near the close. And that's exactly proving my point. I don't want to necessarily stress the time, more so price. So within the first 10 days of trade, we had set a high and low, but the break didn't come till late in the month. So once that high and low is set, time has no bearing, right? You're waiting for a break above this level or a break of the lows. So hope that adds some more flavor on that front. All right, guys, we'll wrap it up here. We'll be back tomorrow morning at 8:30 Eastern for the intraday strategy webinar. Till then, best of luck trading, and keep on pat. Anyone who's trading Kiwi, guys, in just under half an hour, you're going to be heading into that RB and Z interest rate decision. Again, we'll try to keep you updated on Squawk if we take any positions on that. Have a great session, guys. We'll see you tomorrow morning. Cheers.